What's going on, everyone? It's Paul, the 920 trader with 920 Trading and Trading Decoded. You know what? It was a really nice day in the market today, particularly for SPY and SPX. You know, when we were in here yesterday talking about this, we were talking about yesterday and how it was a wonderful trending day. Now, I know a lot of people have a really hard time with trending days for whatever reason. Maybe they just can't pick a good entry. But for whatever reason, some people just seem to struggle with trending days. I like trending days, not a problem. But if we look at today's chart was absolutely incredible. Just from a 920 standpoint, from a chart standpoint, it was almost predictable in the way that it moved today, which is the type of day that we really are interested in as 920 traders. So right out of the gate, if we look at pre-market, kind of trending down from pre-market. And as a matter of fact, one of our members said, "Hey, listen, do you think we're going to be looking for puts at open?" I said, "I don't know. It's entirely possible that we look for puts at open. But let's also take a look at calls. Let's not give ourselves a bias as to what we think it's going to do based on what it did in pre-market alone." So we're sitting there waiting for the open. Open happens, and we were looking at VWAP. VWAP, for those of you who don't know, volume weighted average price. So VWAP tends to be kind of a magnet at times. Sometimes it is, sometimes it isn't. But we're actually looking for calls right out of the gate this morning for calls. But if and only if we breached VWAP to the upside. Now look at all these candles right in a row. I mean, several candles. What about the first 10 or 11 minutes? We tested VWAP, tested VWAP, tested VWAP, and eventually we just didn't get there. So we actually got confirmed into puts relatively early in the morning. For just a few minutes, and then it reversed. It went back up. We tested VWAP again, came back down, and made a nice move over VWAP. Ran up for just a little bit. This is actually, this is going to be our first cross of the day, right in here at about just before 10 o'clock Eastern time. We came down, we tested VWAP again, got over it, and then ran up, had a nice run up, nice run down, tested VWAP again. Now, we had a couple of our members that took a couple of the crosses early. I like to wait at least 10 minutes, generally speaking, unless I get a really clear signal. So for me, 10 minutes, volatility kind of slows down just a little bit, kind of shakes out a little bit, if you will. But anyway, a couple of our members actually lost money on the first couple of crosses, both to the upside and to the downside, and that's okay. As traders, our only job as traders is to execute according to our trading plan, whatever our trading plan is. Now, as a 920 trader, we look for the cross of the 9 over the 20, either to the upside or the downside. Now, there are multiple ways to play the 920 crossover. And if you'd like more information on that, stop by 920trading.com. The entire strategy is laid out from A to Z. But at any rate, a couple of our members took a couple of early losses, nothing big. Everybody tends to predefine their risk before they ever enter a trade, which is absolutely a good thing. That is 100% how you are supposed to trade. So I wasn't necessarily itching for a trade, but at the same time, I was thinking, you know what, I'm going to get a signal at some point. So I waited until this cross right in here, just after, we're about an hour and a half into the trading day. So I took this cross right here. The smiley face denotes where I took that first cross. So based on the 920 rules, essentially, we're looking for a cross to the upside, and then the first green candle that closes once we get the cross. That is our signal from a conservative standpoint. So that's very conservative way to trade it. I actually jumped the trade by a couple of minutes. We breached the 20 to the upside. So the blue is the 9, the red is the 20. We breached the 20 to the upside. So right in here, 1103, I took calls. Now, in taking calls as a 920 trader, you notice that I don't have a whole lot of other lines on my chart. I don't. Generally speaking, I'm looking at pre-market high, pre-market low, and then once we take out pre-market low, I'm say, okay, let's take a look at pre-market high. But at any rate, as a 920 trader, I am relying on both the 9 and the 20 to support me on the way up. So this is my support, folks. The 9 is my support on the way up. Now, coming back to the downside, the 9 is my resistance. So when we say, hey, we're riding the 9, that's exactly what we're doing. We're like a surfer on a wave. We're just riding it up, riding it down, wherever it takes us. That's what we're going to do. Okay, so anyway, I took this trade, hour and a half into the day, took it and wrote it up. It was a really, really nice trade. I closed out on this candle right here. So 11:37. So I was in the trade a little over 30 minutes, which is it's a decent time to be in a trade. I've been in trades, obviously a lot less, shorter time than that, and most certainly a lot longer at times as well. But at any rate, I confirmed into my trade right in here. I validated out of my trade in here. So I'm thinking, okay, we've got a little pullback going on. So let's go ahead and see if we can jump this next trade to the upside. So this candle right here, 1144, I took what's called a double cross to the upside. Essentially what a double cross is we open below the 9. So you can see this candle right here. We open below the 9 and close above the 20. Now, when we are in an uptrending market, when we're moving up, double crosses, generally speaking, they do fairly well. Now, a double cross is an anticipatory move, so you are actually jumping the moving averages, sometimes by a few minutes. But again, I was using this 9 as my support on the way up. So I wrote it up. Actually, I held through this pullback here. This was a big candle. This was right at noon. I will not forget this candle because we're pushing up, and out of nowhere, bam, this candle came. Now, on this particular trade, kind of my last point of support down below me is my 20. That's why we use both the 9 and the 20. From a conservative standpoint, we always use the 9. If we're being more aggressive, we'll let it bounce off the 20 back to the upside once or twice and try to recapture the 9 back to the upside. But at any rate, I closed out in here, right in here. So another, 20-minute, 30-minute trade, somewhere right around in there. So a very, very nice trade. I didn't take anything for the next hour and a half, somewhere right around in there. We just kind of bounced around. We ran up. Now, just like yesterday, we had 8 crosses to the upside yesterday. 6 of those crosses ended up being very, very profitable trades. Today, haven't counted the crosses back to the upside yet. We had a number of crosses that worked very, very well. I do believe this is one of the crosses. This is the only cross, or this is the first cross that didn't work out. If you are playing the 920 strategy strictly based on the conservative rules. So again, you wait for the cross to the upside, and then that first candle that closes green after that, you put on the trade without regard for the outcome of the trade. And let me be very, very clear that I say, if you are a process trader, you are not at all concerned about the outcome of the trade. You're allowing the chart to tell you when to get into the trade, and you are allowing the chart to tell you when to get out of the trade. And we have very, very specific rules based on the type of strategy that you are playing relative to the 920. So at any rate, this trade didn't work out. Next trade up, may have worked, may not have worked. At any rate, we ran up quite a bit. And I remember I called this trade in here. I said, folks, we have a stovepipe hat formation forming right now because we're kind of running along. And then we had this big spike up, this massive spike down. And then we made this kind of this weak shoulder off to the left. So you could call this almost an exaggerated head and shoulders. So we have this big shoulder line over to our left, and then we have this small shoulder off to the right. Now, we were looking at support about 417, I believe it was 417, 18, 19, somewhere right around in here. And I'll show that here in a few minutes on the 5-minute. But I said, okay, folks, if we can breach, and it may have been the POC. POC may have been, which is the point of control, the point at which most money has changed hands during the trading day. I said, if we can breach the POC back to the downside and breach that level of support, we could take it for a run. And that's exactly what happened. It was an absolute beautiful, beautiful, beautiful play to the downside. So here's how this trade works out relative to the 920. So we got our cross right in here. And we wait for, according to the rules, we wait for the first red candle that closes after we get the cross. So the first red candle that closes below the 9, that is where we put on the trade. That is on this candle right here. So at 13.18. Absolutely beautiful to the downside. Now, if you play this conservatively, there is a good probability, or at least a high probability, that you would close out the trade just a couple minutes later. So at 13.21, only because we breached the 9 back to the downside. Now, because the 9 and the 20 are close together, we can use that 20 as an additional safety net, if you will. So that's additional resistance. Now, if we breach that 20 to the upside, we absolutely positively want to close out of that trade. But because we didn't, we were able to recapture the 9 and take it back down. Now, at this point, we're running along pretty good to the downside. And again, I was not in this trade. I did not take this trade. I like to trade generally the first hour and a half, 2 hours of the day, and then wait for maybe the last hour or so, power hour, if you will, to see if there's any trade. And if it makes itself available, I will consider putting it on. So I did not take this trade back to the downside. We got to a very, very, again, I was looking for VWAP down here, but we didn't test VWAP. Okay, we got pretty close to it, but we came down to this level of support right in here where we ran up earlier in the day. So guess what? We knew we had some support there. And it ran up for just a couple of minutes, got into what is called the fishtail. The fishtail is the space between the 9 and the 20. And then we actually had confirmation into this play on this candle right here at 13.45. And look what it did for the next 6 or 7 minutes. It just ran. Really, really, really strong trade to the upside. But again, I did not take that trade. Wherever you see a smiley face on the chart, that's where I put on the trade. Okay, so I took that, did not take this, but I said, you know what? I've missed the last couple of really, really nice trades. So let's see if we can do the same thing at essentially the same level again. So it's actually a very, very nice setup right here at 14.12. So at 14.12, what did we have? We had the 9 crossing the 20 back to the downside. We still had POC way up here, 437.40-ish, somewhere right around in here. I took this to the downside, as did a lot of our members. Caught this play back to the downside, rode it through a little bit of pullback, and then came down to where we pulled back up against the 9 that second time we closed out the trade. But at any rate, that's the 920 in action on the 1 minute. Very, very, very well-defined plays throughout the day. Okay, so we had a cross here. Again, really, really nice trades throughout the trading day. Now, there is a specific candle that we as a group are looking for every single day. We call it the 350 candle because it happens obviously every day at 350. This is one of those plays that some people take, some people don't take. I take it every now and again. If the setup is there, I will take the trade. Today, the setup was not there because it was actually too late in the run back to the downside. Okay, we did come down the candle before we touched VWAP, and then that 350 candle ran down really, really hard, captured that VWAP back to the upside, and then it ran just a little bit into close. Now, the problem with getting on the wrong side of a trade late in the day is theta. If you are playing 0 DTEs, meaning options that expire the same day, guess what? It's hard to outpace theta if the move moves against you just a little bit. So that is a caution for playing the 350 candle. If it goes in your favor, you can do very, very well. If it goes against you, it can hurt you pretty badly. So my recommendation is one of two different things. If you're going to play it, make sure your setup is there. Okay. In other words, don't just kind of, no gambling. Now, the second thing is take a small position, something that if it goes against you, it won't hurt you. But anyway, That's the 350 candle. And again, we look at that 350 candle every day. It's kind of it's a on market on close. That's what we're looking for. It's all of those orders that are sitting there that say, okay, 10 minutes before close, I'm going to purchase, irrespective of where the market is. It's called market on close. They also have a limit on close as well. But anyway, that's the market on close. You can see that volume really, really spikes up on that 350 candle. So this is what it looked like. It played out very, very well. As it does, the 920 is a really sound trading strategy. As with any strategy, there is nothing foolproof. There's nothing 100%. You're going to have wins. You're going to have losses. But as traders, again, our only job is to execute our trades according to our trading plan. There can be no equivocation about that. That is our job as a trader. So that's what it looks like on the 1 minute. On the 2 minute, it kind of smooths it out just a little bit. Taking a look at the 3 minute, even a little bit more smooth. Now, when we get to the 5 minute, okay, you can see it had really, really nice runs all day. 15 minute, not so important today. But the 1 minute is really where it shines today, just because it was so very well defined throughout the trading day. Absolutely wonderful day in the market today. So, hey, I would like to thank everybody for joining us for our video today. It's kind of the recap. It's the SPY recap relative to the 920 and how it played out today. If you like our videos, please like, subscribe, share, and comment. Now, if you like what we're doing on the videos, please come check us out at Trading Decoded. The link is directly down below, and we offer live trading every single day. So every single day that the market is open, we are in there trading. Now, let's say you don't want to trade the 920, that's fine. We have other strategies as well. So we've got 2 different live rooms going every single day. So come check us out. We're going to give you that first week for free. Now, if you're interested in learning more about the 920 strategy, head on over to 920trading.com. Again, those details are down below. So again, I'd just like to thank everybody for stopping by today, checking out the video. I hope everybody has a great day, and we will see you tomorrow in the markets.